Hey everyone, how's it going? We just got the closing bell for October 17th. Uh, it was a pretty kind of interesting day where we gapped up and then we started to trade lower. So basically, the bulls were not able to stay in control of this market. The bears showed up and they started to take over. So let's see how everything developed throughout the day. So we started out, as we said, we gapped up. Let's just look at the SPY. That'll be easier. We gapped up. Maybe the SPX would be easier. We gapped up, and then we really started to trade down. Then we traded sideways, and then we started to go down again. So based on my commentary in the Telegram channel before the market opened, I noted that we gapped up all the way up to that 585 level. That is, well, I guess I should use the SPY. 585 is a level that we've been looking at very carefully for a little bit of time now. We were saying that if we got past 580, then we had a chance to run up to 585, then 590, and all the way up to 600. But at the beginning of this week, that gamma structure changed, and it looked like 585 would act as a resistance because it became more of a spike. And yes, prices are drawn to that spike, but once we hit that spike, we have to see what the reaction is. Either it bounces off of it or it sticks to it, or if that gamma came back to higher strikes, it could move through it. And in the case of today, it just hit that gamma pocket and it bounced off of it. There was no follow through. There was no stickiness. So early in the morning, I said, well, that 585 is going to be an important level, and how we react to it is going to help us understand how the rest of the day is going to develop. And you can see that, sure enough, we traded down off of that level. And once we knew that, and 585 is this orange line, so we actually opened a little bit above 585. Once we returned close to 585, that was a great shorting opportunity back down to the previous low of the day, and that was worth about 77% gain on a put option, depending on which option you chose, of course. But there's plenty of opportunity in a trade like that. Later on, the gamma shifted I should say that shifted. We got a better picture of the gamma in 0DTE, and 583 came into focus. That was quite a bit later in the day. The market spent a lot of time trying to figure out where it was going to go. So that was why it was chopping sideways. And then it became a little bit more clear that 583 would be in focus. And we spent most of the last couple hours of the day near that 583 level. 583 is actually down here. Okay. And we closed at 582.48, so halfway between 582 and 583. So what does that mean in the larger context? Well, it just means that we're still chopping sideways. It looked like that this week, maybe we were going to break up and go out, but no, we just went sideways. So we traded sideways over here, and now we're trading sideways at just slightly higher levels. That's all it means. So this market is not in a rush to move upwards. There's a lot of things that need to happen. So we got some really good economic data today. We got great beat on jobless claims. We got a great beat on retail sales. We had Taiwan Semiconductor come out with excellent earnings, and actually all the major earnings reports that came out today, for the most part, were very positive, and there were several gap ups in those names, and that's why we gapped up in the overall market today, but it was not sustained. The buyers did not stay in control, and we traded back down. So now we're just looking like we basically chopped sideways. We're actually down 4 pennies on the SPY. So we're actually a tiny bit below where we were yesterday, but that's basically the same level. So we just chopped sideways. That was it. We had a little excitement with a pop up with the earnings reports and whatnot, and then we came right back down. So this is starting to just repeat the experience that we've had over the last month or the last 2 months, where we have all these really great catalysts and they come in really, really strong, but for whatever reason, the market just isn't reacting to them. We had the 50 basis point rate cut. We had great CPI prints. We had all sorts of good earnings like we did today. We just keep on getting this data that should be sending this market higher and reacting like it was over here, but instead it's very just barely moving upwards, if we could even call it that. It's kind of moving sideways with a very, very, very slight preference towards moving up. So when I look at this, I don't remember if we looked at this yesterday, but all year it was very aggressive, and then we got pulled a little bit of a pullback here. It was still very aggressive and then became a more moderate. And it looked like maybe we could get back to being aggressive, but over the last couple of weeks, it's really just been kind of muted and flat. It's becoming much more passive, much more sideways type of trading, even though there is this positive slope to it. It's just a lot more muted than it was earlier this year. And so now I am remembering, yesterday we did talk about this, where what we really need is for, if this market is going to go up and it's going to go up quickly and it's going to go up significantly, we need something else to grab the reins and pull it upwards. Earlier this year, it was the semiconductors and NVIDIA. And now it's just not happening anymore. We're getting great news out of NVIDIA, but it's just not flying to we got great earnings from Taiwan Semiconductor today, and it gapped up way up, but you can see there was this big trading range, and we closed just a tad bit above the open. So it's just not doing much to help us in the S&P 500. So if we have all these strong catalysts and they're all coming in with these really great numbers, and all the market can do is just blip upwards a random amount. I mean, actually today it wasn't even a random amount. It was just literally sideways. Then the natural tendency of this market is to start to fall a little bit. It doesn't mean that we're going to crash. It doesn't mean that we're going to become bearish. It doesn't mean that we're necessarily going to go down through that MA200. It just means that it's going to have a really, really hard time continuing to move upwards unless something drastically changes, because all the strong stimuli that we've had so far hasn't been able to do anything. It's like you keep giving the market stronger and stronger medicine, but all it does is keep the condition the same. It doesn't actually revive the market. It doesn't actually make it healthier or make it better. It just stays the same. We're doing everything we can, and it just status quo. It's not improving. So what it really feels like now in this context is that we do need at least a little bit of a pullback. Right now, it feels like more to the MA50 or potentially MA200 before we can really get a nice solid move upwards again. So again, all we're talking about is a pullback, not a crash. So in any given year, we expect one correction of about 10 to 20%, and one pullback of 2 to 3 pullbacks of 5 to 10%. So we got our 5 to 10% over here. That was number one. And then we got our correction right here. That was the correction, about 10%. And then this one, I don't remember if we got quite to a pullback territory. Almost. So we could generously call this a second pullback. So it looks like we need the third pullback if this is going to continue to be a strong bullish market into the end of the year, into quarter four. So that's what we're looking for. A pullback into that MA50 would be more ideal, but if it went to MA200, that'd be fine as well, before we can start to move to higher levels in this market. And the gamma structure is supporting that theory. Momentum, what happened 2 days ago when we came down to touch that EMA8, well, our momentum got overheated. And so we are expecting either a pause or a slight pullback. We got a tiny baby, I can't even call it a pullback. It's a mean reversion down to the EMA8 mean reversion that corrected things. And then now we're back here, and now we have that same situation. That's actually, I don't know about the end of the day, but at the beginning of the day. That's what we were in. Let's see what today did for that. So let's take a look at our 90-day highs. Day 254.23. So we got maybe probably not quite enough of a mean reversion for us to relieve this. So what we see is over here, we're at 300, which is starting to get up there. Then we hit 373. Once we get to 400 and above, or close to 400, that's when we start expecting those baby mean reversions. And then we got it down to the 100s. Didn't get a huge amount, and normally we see it at least in the 100s, sometimes even double digits. But then we bounce right back up to 384, even closer to that 400 number. And we've pulled back to 254. That's not quite enough. So we do expect this to hit in the 100s or lower before we would expect the market to bounce back up. So just with that single piece of data alone, the suspicion, right, that's just one piece of data. So we can't draw a super hard conclusion from this. But the suspicion is that we're going to keep on pulling back, maybe down to that EMA 8. And if things are even more aggressive, then down to the EMA 20, and we'll see what happens from there. Then a bounce, okay, that would relieve some of this pressure I was talking about. It feels like we need more of a move to that MA 50, more of a closer to 5% move, but maybe it's enough. Maybe it's enough to go another baby leg. When I was talking to MA 50 and MA 200s, I was talking like a larger move upwards. But if we're going to kind of baby shift, just like we chopped sideways here, and then we shifted baby shift to chop sideways over here, well, if we have a baby pullback, then maybe we can baby shift to a slightly higher chop sideways. But if we're going to be directional, like strongly directional, then we'll need a deeper pullback. So that's what we're going to look for tomorrow. Let's see if we could get back down to the EMA 8. Then we have the monthly options expiration. And a lot of times it's a reshuffling of investments. All of the money that was in the October 18th expirations needs to be rolled into something else, or it needs to leave the market completely. If it leaves the market completely, then we'll have a pullback for sure, because the money is no longer in the market. It might be in bonds, it might be in gold, it might be in something else, but it has left the market. It might be in cash. But if it gets rolled back into the stock market, we'll want to see which sectors are getting that money. Is it the same sectors as before the expiration, or did opinions change in the last month? In the case of SPY specifically, then that is a broad indicator and it covers all the major sectors. So in that case, we're just looking for the strikes. What strikes get the most attention? If this rolls off, that 585 rolls off tomorrow, and we start to get a lot of attention at 590, 595, 600, then we've got a clearer direction that probably this market can move higher. If all of the concentration goes down into 575, 570, 560, then we're going to start expecting that pullback that I've been talking about. So a lot will depend on what happens immediately after the options expiration, and we won't know that until Monday morning. So for now, for today, just know that we have this big options expiration coming up, and that could completely change the picture in the short-term picture of the markets. I think that is, let's take a quick look at our sectors, see how our sectors are doing, because remember, if we have our sectors stacked nicely, where we have high risk, we see money going into high risk, and then we have a lesser amount of money going into medium risk, and then a lesser amount of money going to low risk, then we could know that the market is expressing that confidence, because all that money is going into the high risk type of investments, so that we're expressing an opinion that this market can keep on moving upwards. If everything's all weird and jumbled up, then we expect choppiness while that market sorts it out. And then if we have the reverse, all the money is going into those low risk assets, then we know that major institutions are preparing for a downside move. So let's take a look at that and see if there's any clues that can be had. And then we'll wrap up today's session. So let's just look in the past month. So in the past month, so it looks like semiconductors are up there, but then defense is up there. And then we have industrials and financials. Those are more medium risk. Then we have a higher risk in the technology sector. Energy is more of a medium or sometimes largely irrelevant in the context of the market because it will trade more like a commodity rather than an equity. Gold is just there for reference, but that is defensive. And then we have QQQ and IWM. Those are more higher risk. Then we have materials. That is a medium to low risk. Dow Jones, low risk. SPY, medium. Discretionary, high. Retail, high. Home builders based on interest rates. Utilities, conservative or interest rates. Communications, high. And then we've got real estate, medium or based on interest rate. Then low risk, low risk. So we have a kind of mixed bag. We do have some of the lower risk ones at the very bottom, which is good. But the rest is kind of this jumbled up mess of medium and high risk. So I would say right now, we're confused. We're trying to sort it out. And that is definitely being reflected in the market in the fact that it's mostly chopping sideways. I know that a lot of people will look at this and say, Kane is sloping up. Or Kane, it's sloping up. Kane, you're like, it looks like it's sloping up depending on how I change the view of this picture. So what we want to see though is if I drew a box, because remember markets fluctuate. They don't just move straight up and straight down. This is a pretty contained box. We traded up to that box, and then we traded in the box, then we traded below the box. Here we're trading up, then we trade into a box, and then we broke above that box, and now this is either travel or it's another box. And right now, because of the resistance that we're seeing at that 585 level, it looks more like a box than it is travel. If I'm wrong, then tomorrow or Monday we'll do this. And then I'll be wrong. And then we'll say, okay, when do we get to the next box? So, but for now, to me, it looks like that is just another box stacked right on top of this box. We'll see. I could be easily proven wrong tomorrow or Monday, especially after options expiration. But for now, based on the market forces that I see, the fact that sectors are all jumbled up, the fact that we have heightened volatility in the market, right? We're still at 19. The fact that we have that gamma pocket 585 that did get reacted to and did get rejected twice in the past week. All of these things, and maybe we could take a quick look at CPC. Where's CPC today? 89. So that doesn't really indicate too much. I'm not going to draw any conclusions from that. But everything else is telling me that it is more likely a box than it is a travel towards a higher level. So we'll see. And especially after options expiration, everything that I just talked about could be wiped clean. We get a largely clean slate after Monday or after Friday. So technically Monday, at the open of Monday, we'll see how that session goes and we'll be able to get a little bit of a clearer picture. Not everything gets wiped clean. Obviously, the boxes here still exist. The price action still exists. There's still a lot of things that remain in place, but that gamma structure could completely change. Our momentum could completely change. The sectors that get money rolled into could completely change. So a lot of things change on Monday and we'll have to reevaluate. But for now, it does, to me, look like this is just a low volume, very low volume, low volatility, chops sideways with a slight slope upwards. So that's it for today. Hopefully that helps you kind of plan your day tomorrow. We have one more day in the trading week. And generally on Fridays, I'll do it as a recording because on Fridays, the schedule is a little bit more fluid. So that'll be it for today. Have a wonderful rest of your day, and I will see you guys tomorrow.